Let's talk about it and find you some opportunities. Joining us is Jamie Iselin. He is head of municipal fixed income at Neuberger Berman. Jamie, are you seeing an increase in interest in munis from your clients?
Absolutely, Brian. As you point out, this has been a rough total return year for munis, but that means that yields have risen dramatically. So just on the short end of the yield curve right now, yields for AAA bonds year to date are up about 275 basis points. We think that's creating a really, really good entry point for investors. And as you point out, a lot of tax efficiency, which at the end of the day in bonds, it's about the amount of yield that you end up keeping. So we think the market is really interesting right now.
Now, we do worry about, I just mentioned earlier in the show about the risk of financial contagion. What's happening in Europe, we know everything's connected, banks are connected, pension funds. It's all one big global system. How do you find bonds in areas, school districts, sewage, state, whatever it might be, that may be immune to any kind of economic downturn?
Look, these are, as you point out, Brian, these are uncertain times, and we're dealing with really volatile markets. Muni bond investing is about preservation of capital, and I think you have to look in uncertain times for the safest places. One area that I think makes a lot of sense is if you look at bonds from a state like Texas, there's no personal income tax. So you don't have the same in-state demand for those bonds. There's many high-quality credits from the state of Texas, and particularly you see a lot of school district issuance. Those bonds on their own, Brian, are typically rated in the AA category, and many of them are wrapped with a program called the Permanent School Fund that makes them into AAA rated bonds. That's a bulletproof, very safe way to be involved in the market. And because there's less in-state demand in Texas, you might pick them up with an extra 20 or 30 basis points.
What kind of a yield can you get, and what kind of tax benefits are there?
Right now, in the short end of the curve, you can easily buy in 1 to 2 year paper. You can buy yields around 3%. That's a taxable equivalent of 5% for someone in the highest tax bracket. That produces about 80 basis points over the current 2-year Treasury. We think that's a really, really good deal. Now, if somebody wants to go down a little bit in credit quality, has a higher risk appetite, you can buy the state of Illinois' general obligation credit, which is an upgraded credit over the last couple of years, at a yield of around 4.4% for 1 to 2 year bonds.
What's the capital risk?
I think it's quite low because, again, they have the full faith in credit and the taxing power of the issuer, and that credit has actually been moving in the right direction. It's now a high BBB rated credit now. So I think that's a really, really nice way to generate some extra yield on the short end of the curve.
Jamie Iselin, Neuberger Berman, good stuff. People are looking for any place to find some protection and maybe make a little vig on the side. Jamie, thank you very much.